The Floor Show. Guys, if these countries do in fact choose to boycott our goods, I need to find out from you how long a tail or an effect would it have, and how do you invest around that? Tim Anderson, can I just quickly say, because I'm noticing we're well off the lows of the session, down 114 points for the Dow. We've got a big weather system over New York. Is it possible that a lot of traders left, or because I don't see too many people behind you?
No, I would say it's average attendance for a Friday afternoon. People are, it's going to be a little rain regardless of when they leave, so I don't think, I haven't noticed a big exodus early, midday.
All right, so let's get to the cost of the tariffs then and the ripple effect.
Well, if you're talking about a full-blown trade war, I mean, first of all, I really doubt that anything like that's going to happen. I think it's probably less than a 2% probability. But if something like that were to take place, you'd want to be very defensive. You'd probably want to hide out in consumer staples, gold, some other hard assets, and anything that would be an inflation play, because that would be a very, very inflationary scenario that you're talking about, probably the likes of which we haven't seen for over 25 years, not the 2 to 3% inflation that the Fed's been talking about. I'm talking real inflation.
Okay. Alan Nuckman, give us your sense of the sort of whipsaw effect that we could see here, aside from what we've seen in the markets. But I do want to point out, low of the session today was down 391 points. High of the session was a loss of 57 for the Dow. Just a second ago, we were down under 95 points. So it seemed to be for a moment we were climbing to the flat line, at least closer.
Seems to be a little bit more stable. Anything can happen, obviously, in this last half hour, but we were on the air together exactly at this time yesterday, and I said we needed to input a 24-hour rule. After any time silly comes out of Washington, we want to focus on the price, not the policy. Right. And you can see how the markets digested it, kind of tossed it around a bit, and now this is the result, and we're actually positive. So net, we've got the S&P still unchanged on the year, and not much damage here today. So I'm still confident in the markets overall, and we're still talking about a lot of ifs that would have to happen to really damage our economy.
S&P is well up off the floor. It had been down 30 points. It's up 11.
Exactly.
Alan, again, the stock market is not the U.S. economy. We have to be very clear about that.
Yeah, that's what we always say, that, the stock market's forward-looking, and hopefully it's already moved past this. What I saw was some profit-taking this week because the dollar had strengthened, and we had gone straight up for about 10 sessions in the stock market. So look at things on a weekly basis. Yes, we had a couple of bumps here on a Thursday and a Friday, but I'm still feeling good about the way we've made a base in the S&P over the last couple of weeks, and that's how the markets form a bottom and attack the highs one more time.
Scott, what do you think about that?
Liz, I think what's happened is we're in this environment now over the last 6-8 weeks where the first reaction to any sort of negativity that we see is the sell button, is the panic button. Same thing that happened when the market fell out of bed, just a month ago when we saw VIX spike over 45. It's that initial panic. And then when cooler heads have prevailed, like what's happening right now, we see just a massive fallout in volatility. And that's what's going on now. Now, I do think that these decisions, if you look back in history, and I'm not an economist, but I study economics. If you look back in history, this is bad for the U.S. economy. Going at it alone, looking at it as a game, as President Trump said that he was doing, that trade wars is a game that can be won. It's not a great idea. The world is more than ever so interdependent, country by country now, second by second, decision by decision. The risk that we have, like what you had mentioned from the gentleman from Barclays, the risk we have is not what these tariffs are going to do, but what the other countries are going to do next to combat what's going on.
Down 111 at this moment. Good to see all of you. Tim, Scott, Alan, appreciate you.